Support for this podcast is provided by Crux. Tax professionals know that investing in high-quality tax credits can deliver meaningful savings. That's why a quarter of the Fortune 1000 is actively participating in the tax credit market. But it can be hard to source, perform due diligence, and execute energy and manufacturing tax credit transactions, especially when tax professionals are busier than ever. That's where Crux comes in. Crux is the trusted partner for transferable tax credits and tax equity investments. The Crux team has facilitated over $30 billion in tax credit transactions throughout their careers, including over 120 transactions at Crux. Crux offers a full-service execution team, industry-leading market intelligence, and AI-powered tools, bringing certainty and predictability to the transaction experience. Now your tax team can create financial value for your company, secure in the knowledge that you're getting the best the market has to offer. Ready to get started? Learn more at cruxclimate.com/contact. That's cruxclimate.com/contact.
Welcome to Tax Notes Talk, a podcast from Tax Notes, the leading source of tax news, information, and analysis.
Welcome to the podcast. I'm David Stewart, Editor-in-Chief of Tax Notes Today International. This week, 'tis the season. The IRS recently announced that filing season would begin this year on January 26th, halting speculation that the agency's staffing cuts might lead to a later start date. But practitioners are still concerned that personnel shortages will affect the IRS's performance during this filing cycle. With several new provisions from the One Big Beautiful Bill Act coming into effect, the agency's limited capacity could lead to a backlog of questions and amended returns. So what will the 2026 filing season look like? And what issues could filers run into? Here to talk more about this is TaxNote's IRS reporter Benjamin Valdez. Ben, welcome back to the podcast.
Thanks for having me.
Now, I understand you spoke with someone about this year's filing season. Who did you talk to?
I spoke with Philip Hwang. He's the Chief Tax Officer at Optima Tax Relief and the National Chair of the Taxpayer Advocacy Panel.
And what all did you discuss?
We discussed the upcoming filing season and some of the new considerations for the IRS and taxpayers, including the One Big Beautiful Bill Act and the new individual tax provisions.
All right, let's go to that interview.
Philip, welcome to the podcast.
Thank you, Ben.
You were recently named the chair of the Taxpayer Advocacy Panel. Can you describe what TAP is and what this role entails?
Sure. Taxpayer Advocacy Panel is a federal advisory committee, actually one of three that helps advise Congress and IRS on how to improve their processes, right? And tax administration in particular. TAP is made up of volunteers purely. There is IRS staff that help run the administrative side of things, but the way that I think most people will know TAP is through our annual report. We make recommendations, and not to be confused with the Purple Book, which comes out of the National Taxpayer Advocate Office, who we also report to. But these are grassroots feedback from just normal taxpayers across the nation in our attempts to provide some level of recommendation to improve the IRS.
Got it. And what kind of issues does TAP see during the filing season when it comes to sort of taxpayer feedback and the kind of issues that you field?
Great question. We have a landing spot on our improveirs.org where taxpayers can put in recommendations, and we get all sorts of inquiries during tax season. A big theme that we see is where's my refund? A lot of things about the processing of their tax return, especially as of late. In the past few years, IRS did successfully work through a backlog of returns that arose out of, COVID, mail delays, mail getting lost, trucked back and forth from service centers. But the themes don't change really. Even in this last year, a lot about where's my refund, what's taking so long. I called this number, was on hold for, X number of minutes. So a lot of servicing concerns. And just to be clear, what we try to look for as part of the panel is systemic issues, right? But we do see a lot of individual, very use case specific concerns come through that channel during tax season.
You mentioned the annual report. What sort of recommendations or topics are you weighing as we go into this filing season in this new year?
So we're always working like, N-1. So a lot of it came from last year. Some really like hot button issues are like online engagement, scaled customer service. We see there's unauthenticated chatbots where they can answer general questions about your tax situation. But really, we're asking for a more tailored approach and perhaps creating some authentication layers so that that chatbot or virtual assistant can help the taxpayer in a more meaningful way. Other things we looked at was the individual online account. So IRS recently drastically improved and included a lot of features into this account. For me, I'm always looking at ways to make things better, even if it's just one new feature, one new thing. Things like including all notices on that online account. Right now, it's a limited select few for good reason. IRS currently works on like a multitude of systems, right? So sometimes the left hand doesn't know what the right hand sent out, and vice versa. So we just want a central place, centralized location where a taxpayer can self-service in a sense.
And the Taxpayer Advocate Service, along with the IRS, has seen large staff cuts this year. Have you seen how those cuts have affected the work the service does?
Yeah, so at least as a part of the panel, we did see our applicant pool being frozen. So like we're not taking any new applications. But the staff is so resourceful. We were looking at calling up alternates that have applied in the past, even extending additional terms. But what I see coming out of it is, resilience and dedication to the mission, really, to help improve the IRS, to be the voice of the taxpayer. Unfortunately, it did leave us impacted as well. We have less staff. But with that, we're re-looking at our subcommittees that are responsible for different areas, right? So we have a committee just responsible looking at how to improve notices and correspondence, right? Another committee looking at taxpayer assistance centers, right, where you can physically go in with appointment to get help with your tax situation. And so we had about like five or six committees. I think we're looking to consolidate that into this new tax season. The same work will be done, same level of care by our volunteers, but we're just working with what we have.
And the IRS going into this filing season is a very different agency than it was a year ago, largely due to the staff reductions and leadership changes. From a service and responsiveness perspective, what has it been like dealing with the IRS during these changes, and how is it today?
I feel like the IRS is always a changing organization for good and for bad, right? And I think they've adapted really well. I think the first clear indication of that was, even the shutdown back in 2018, I believe, before the recent shutdown was the biggest shutdown. And, they had to pivot, they had to figure out what was essential and not essential services. So I feel like through that, I see a constant theme of adaptability, right? I think we can always say we need more staff, we need more funding, and which is true, right? IRS is one of the few agencies that does bring positive net income to the government. But still, I think they have their heads in the right place, right? They're looking at ways to scale customer service. I think that's the biggest touch point that I see in this upcoming filing season to be impacted. Hopefully, not detrimentally. I think they will figure out a way, and I'm confident in their current leadership that they will figure out a way to service taxpayers, whether it's through online accounts, chatbots, maybe some automation, right? Or just being proactive about educating and inform taxpayers like what is happening and what to expect. It's all about managing expectations of taxpayers. And this year does present unique challenges. There's a huge legislative change to OB3, like executive policies, like no more paper checks. And there's a lot to navigate. But if there's any agency that can do it successfully, I believe it's the IRS, right? They're responsible for successfully issuing EIP payments during COVID. So this is just another bump in the road, so to speak. But I think they'll be able to figure a way forward.
And you mentioned the OB3 and all the new provisions that that is bringing this year. The IRS says that its systems are updated and ready for the filing season, but at the same time, there's still some guidance that's outstanding. Do you think that we could see an influx of taxpayer questions and concerns relating to this bill?
Yes, definitely. I wouldn't be surprised, even with it takes such a coordinated effort to roll something like this out from industry, from employers, and OB3 touches a lot of different areas. And then, ironically, in some regard, not much changes, right? The tax rates are the same. There's a lot of the TCJA provisions that are just, either converted to permanent now, right? Such as like R&D credits and accelerated depreciation. But I think the general taxpayer, there's always going to be some narrative they hear, right, about the changes, some new refunds, some, expect higher refund rates. And so I think, again, going back to expectations and setting the right ones for the taxpayers it really depends. I think as industry, we can do our best to prepare them, right, to help mitigate the need of service from the IRS directly, right, to get ahead of some of those like very common questions. It's actually quite surprising that, tax season is going to open on the 26th of this year. If I were to bet, I would say like, oh, they would have maybe delayed it. But no, I think that is actually a great leading indicator that albeit, some publication guidances are not fully released and, they're just pushing these things out as soon as they can. I think we'll be fine come tax season after all is said and done.
One of the big changes coming this year is the transition away from paper checks and paper refunds, which could have big implications for a relatively small group of filers. Are there benefits to this transition to going fully digital?
My initial reaction when I heard about this was like, thank God, right? I think there's a lot of potential fraud that is mitigated by going fully quote unquote digital with direct deposits and things of that nature. But I believe that those edge cases make up the largest demand for servicing, generally speaking. That's going to be no different here. But I think the way they're going to administer these changes is thoughtful. I think it takes into consideration those that, whether it's like, I think the clear ones are for religious reasons, they can't, open a bank account or be banked, right? And there's a few select other ones as well, I believe. But overall, I think it will help reduce the amount of fraud that happens, right? And sometimes out of the IRS control, right? There's the chain of custody from processing a return to issuing the check. It goes through so many hands, and like USPS is involved as well. And so, I think that overall it's going to be positive, but with any change, adoption is going to be tough. And I think that's where, as industry, we can set proper expectations about why this is important, why taxpayers benefit from making this change, and if they need an exemption, we can walk them through that as well.
Support for this podcast is provided by Avalara. As a tax professional, you already know compliance isn't just about rates and returns, it's also about accuracy, efficiency, and protecting your business from unnecessary risk. That's why so many finance teams rely on Avalara. Avalara automates sales tax compliance end-to-end. Real-time calculations, more seamless integrations with leading ERPs and accounting systems, and scheduled filing across thousands of jurisdictions. With dashboards and data designed for professionals who live and breathe tax, you stay in control with the information you need in a centralized platform. Free up your team's time, reduce audit exposure, and scale compliance with confidence. Visit avalara.com to learn more. That's avalara.com.
Do you think there could be challenges to sort of raising awareness about this transition, especially for the groups of taxpayers that don't have a bank account? They probably also have other sort of technology barriers potentially. Do you think that's something that the administration is going to have to work through?
Yeah, and I think it's going to really rely on the industry and the grassroots efforts. I think the unique thing about the tax industry is the spectrum of professionals ranges so greatly, and everyone knows a tax preparer, right? And the one time a year they do interact with them, it's usually box of receipts they're providing, or where there's a more organized taxpayer. You get such a varying taxpayer experience through the tax season that adoption is going to be hard to standardize, right? And so you have to meet the taxpayer where they are, communicate with them in the ways they can actually hear what you're trying to say and understand the reasons why, especially if that taxpayer has just voluntarily chosen not to be banked, like explaining the pros, right? And I get it. People have their ways, right? Some people actually still like writing out their tax returns and mailing it, right? They feel the sense of accomplishment. There are things about tax administration from an outsider's perspective that sometimes you think that doesn't make sense. Why aren't they doing this way? Why don't they have an online account? I know last year or the last few years, with ID.me and the whole biometrics, right, of like the liveness check and setting up an account, that was a big barrier. And I feel like even being banked, even though it seems like a very simple task, I think it's going to be a road that's not without speed bumps.
And just to touch again on the fraud that you mentioned that could be potentially mitigated by going fully digital. In a report released last September, the Treasury Inspector General for Tax Administration flagged staff reductions in a few different IRS functions as posing a threat to the success of the 2026 filing season, including an 18% reduction in return integrity and compliance staff. They said this could cause a new influx of undetected fraudulent returns. How does refund fraud affect the average tax filer?
Maybe it's a very like typical lawyer response, but it really depends the extent of the fraud. We see it, I work in a lot of post-filing issues where fraud has already occurred, where the account's a bit of a mess. Let's talk about it in like two categories. One is just a bad return. They make up the numbers, fake Schedule C, whether it's little or some income, but like a net negative, pushing them into this sweet zone for earned income tax credit, which is a refundable credit to be distinguished from credits that are not refundable. And what a refundable credit means is that even though you have zero withholdings, right, theoretically, that credit will be refunded to you as a form of a check and a refund. Whereas a non refundable credit will just go to offset your taxes, right? It won't generate a refund necessarily. And this is why a lot of fraudsters target either fictitiously creating withholdings, right? Or even if they don't have the withholdings to claim as a refund, they'll put you into a zone where you do qualify for EIC, right? Earned income tax credit. And so fake returns is one area. That's where I think the staffing cuts, may hurt or further delay the processing of legitimate returns. Technology is very sophisticated, and IRS is, I would say arguably on the cutting edge in a lot of ways. I know in some ways they're antiquated, but in a lot of ways they're very advanced. And I think this is one of the areas with return processing. This is their report card. This is how a taxpayer will give them a grade. It's based on their filing season experience. And getting that refund check for those that are owed it, that's what we hear, where is my role on tap or even in my day to day. I see a lot of these fraudulent returns or even regular returns being flagged for fraud. The other category fraud that I do see is with stolen identity, right? PII, you have social security numbers. You could fill out that W-9, right? Work under a social security number for whatever purpose, right? Maybe I take your social security number, Ben, and I start working. And so when you come to file your tax return, all of a sudden there's missing income, right? But you're totally unaware. You file your return, and later IRS comes knocking at your door, just as a matter of fear of speech, but issues you a CP 2000, which is automated underreported. And they've detected that, hey, Ben, you did not report all your taxes. And now you have a situation where, unbeknownst to the taxpayer, someone used their social to work. Motivations are different, but I can see that being a complicated web to kind of unwind as well, especially if you're not keeping up with your online account. If you don't regularly, kind of like checking your credit, if you don't regularly see what's happening on your wage and income transcript, you have no idea what's being reported under your social. And so those are the kind of two ways I see it in the day to day. What's most concerning is to resolve these fraud cases. I think on average, the National Taxpayer Advocate Aaron says about 19 to like 22 months, right? And I don't think that figure has improved much more. But the staffing cuts, I could see that going up, but I'm hopeful. Taxpayer services have been talking very confidently about their pivots and even in the way they are more sophisticated at identifying these returns and resolving them. That gives me some hope. And so I try to be optimistic. We can always find 10 reasons to say, it's going to be worse, but hopefully in this area, we can hold our breaths for better.
There were also some staff reductions in the accounts management and submission processing areas. I'm curious, have you seen that impact at all, especially when it comes to the accounts management?
It really depends on the nature of the return. I feel like original returns, generally speaking, are less impacted. I feel like where we felt it a lot is in getting amended returns processed. If you have to amend your return, I would have proper expectations and say you're going to be waiting for quite some time. I imagine with staffing cuts, right, that these areas will be even more impacted. What a lot of people don't realize is like the same customer service rep that is answering the phones is sometimes also doing paperwork, right? And so while highly agile and dynamic in terms of how the IRS can allocate resources, human capital, to different areas, it also it's a double-edged sword, right? So if they're doing the returns, they're not picking up the phone. And so sometimes you can't have your cake and eat it, perhaps a lot of times. And this is, I think, one of those situations. So they're going to have to continue to innovate and strategize how to meet the taxpayers' needs dynamically so that maybe we don't feel those delays, ideally.
One of the changes the IRS is adopting this year is relating to the automatically abated penalties for certain taxpayers. I was wondering if you can explain this change and how it differs from the prior process.
Yeah, that's a great question. I would, maybe if we go back to what this penalty waiver is, right? It's an administrative waiver. It's called a first time abatement. Basically, under normal circumstances, ours has a standard called reasonable cause, right? And so you state your case, the facts and circumstances of why perhaps, you filed late or couldn't or didn't pay your taxes on time. Those are really the two major penalties, the failure to file and failure to pay, or even say an accuracy related penalty as a result of an audit, right? So the IRS representative will evaluate the facts and circumstances and see if a reasonable person would have, in your same shoes, made the same potential error, right? And they will look at it on a case by case basis. The first time abatement is very different, right? It's an administrative waiver, meaning that it has very clear rules, right? Have you filed the past 3 years? Have you filed and paid timely on those years, meaning there's no penalties accrued? If yes, then here you go, you get another pass, right? Maybe this year you filed and paid late, accruing failure to file and failure to pay penalties. Those will all be abated. Interest is not abated, it does get adjusted. So it'll bring you back to as if you filed and paid on time. But if they don't pay on time, you take this waiver, the failure to pay continues, right? And that's 0.5% a month plus compounding interest, which interest compounds daily. And if you're on an installment agreement, it does reduce the penalty to, half of that amount, right? 0.25% a month. And it does cap out at 25%. But, I think the biggest upside of this, and, I'm really happy about this change, is that all taxpayers are entitled to this. And a lot of taxpayers didn't know about it. You had to call in, right? Meaning waiting on hold. Sometimes you don't get through as a taxpayer on your lunch break, right? You have to know what to ask for, right? Otherwise, you're playing Russian roulette with whoever's picking up the phone, right? If they're in a good mood, like humans are humans, right? If they're in a good mood, maybe they'll point you to the right direction. Maybe they don't even know, right? We have a lot of new agents being onboarded, right, constantly, and they're always learning. They can't be expected to know the IRM inside and out. And the IRM is the Internal Revenue Manual, right? It's a playbook for how whoever's picking up the phone should be guiding the taxpayer through their, situation, so to speak, right? Gives the guidance. And so this standardizes that playing field, and everybody gets the same treatment in the sense that this is automatic. So I suspect, probably there's more than 1 million taxpayers every year that file or pay late where this is going to be beneficial, where they do qualify. And it's not just once per account. Every time, so you're going to have that pattern of 3 years of perfect compliance, and perhaps, you slip up that fourth year. This will really help lessen the burden on the phones. I think we're talking about the service levels. Like these are the ways the service can really innovate to help scale the level of service that can be provided, even despite a cut in budget and a reduction in force.
Support for this podcast is provided by the University of California Irvine School of Law Graduate Tax Program. This preeminent and innovative program prepares students to practice tax law at the highest level in the U.S. and abroad. Featuring a low student-to-faculty ratio, cutting-edge technology instruction, and dedicated career support, UC Irvine's graduate tax program helps prepare students for a future in tax law. Program graduates are placed in top tax-related industries practicing law in many major U.S. cities. Applications are open now. For more information and to apply to this highly selective program, visit law.uci.edu/gradtax. That's law.uci.edu/gradtax.
Tax resolution is it's a year-round affair, but I was just wondering sort of how you're preparing for this filing season and anything that you're just on the watch for.
Yeah, tax resolution, and dealing with clients that have outstanding tax balances and actually tax returns, we're always fighting the clock. I think this time is really pivotal for us, and we're glad tax season opened early. We try to even engage them towards the end of the year. It's like reminders, please get your books and records ready, like get your tax forms as agencies are starting to issue those informational returns out, right? The W-2s, the 1099s, right? Preparedness is what we focus on, in January, so that in February we can get started on those returns. Again, filing them for these taxpayers who owe, so that we can kind of break this vicious cycle that they got stuck in, right? They don't owe because they want to. Sometimes life gets the better of you and you have to make hard choices about, perhaps paying your mortgage or instead of making the estimated tax payment. And so I think that's our goal here is to really provide relief. And some of that is breaking the pattern of behavior that the taxpayer had been stuck in, stealing from Peter to pay Paul.
And is there anything that you're doing specifically relating to the new tax law? Like, are you expecting any kind of compliance implications or anything, that might come up in the resolution pipeline?
Yeah, definitely. I think not just waiting for guidance, but creating our own internally to help service our clients better, getting ahead of those questions, right? Managing expectations about, do I qualify? Why is my tax bill so high? Or, I thought I was going to get a bigger refund. Don't I qualify for, no tax on OT, no tax on tips? And even like people still think, oh, how I thought Social Security was not taxable now. It's like, well, depends, right? Like OB3A introduced additional exemptions for those that are 65 and older, and it's kind of a quasi way of making Social Security less taxable if you fall into that category where some of it might become taxable, right? But again, right, we're having to clarify and educate continuously. And a lot of that is understanding where these questions are going to come from and really educating them before they need to ask the question, right? It's like, where can you show me on my return where you took my deduction for no OT? It's like, well, Schedule 1A, right? Or how do I open a Trump account? How do I do this? How do I do that, right? And so I think equipping our staff and educating them so that they can better educate taxpayers, one of the proactive steps we take ahead of any tax season. This one just happens to be a little bit more busy, so to speak, in terms of all the changes that we're going to have to navigate and explain to the taxpayer and client why the return looks the way it does.
The Trump administration has been setting some very lofty refund expectations and saying that they're going to be maybe the biggest that some people have ever seen. How do you sort of manage that expectation when it comes to dealing with clients and what they sort of ask you about their returns?
Oftentimes they'll ask, oh, can you revise the return? And I'm like, oh, happy to do so. What new information do you have to provide, right? Or like, what are your expectations? I think understanding that is our first step. I think the projections that have been coming out about the increased refunds probably stems. I think you're looking at that income range where you have no tax on OT or tips and, the retained high standard deduction plus a slight increase in child tax credits. And like the combination and confluence of all these changes, right? Like it makes sense, right? But that situation doesn't apply to everyone, unfortunately, right? There's phase outs for all these benefits. There's things that don't apply, right? Even the salt temporarily increased salt deduction. Well, that doesn't matter if the standard deduction is still larger than what you would itemize, right? And so some of these benefits don't really fit to every taxpayer in the same way. And I think just walking the client through how these changes are or are not applicable to them is kind of what we're going to have to do all season long. Even my in-laws asked me like, oh, I heard we're getting a check for $2,000 because of the tariffs, right? And it's like, well, it depends, right? And so like that's why I rely on. It's like I don't know, for you. Let's talk more, right? Let's figure out what's going on, what happened in 2025 for you, Ben, and let's see which one of these changes really do apply. And if you think about it, like some people bought solar in the year before in 2024, right? There's reasons why, but there's recency bias in a lot of taxpayers' mind. They just look at the last year and they're like, is it more or less? Is my tax more or less? Is my refund more or less than last year? And then explaining the delta is the challenge that we have.
Philip, thank you so much for your time.
No, thank you. I really appreciate this opportunity. Glad to be here.
That's it for this week. You can follow me online at TaxStew, that's STEW, and be sure to follow at Tax Notes for all things tax. If you have any comments, questions, or suggestions for a future episode, you can email us at podcast@taxanalyst.org. And as always, if you like what we're doing here, please leave a rating or review wherever you download this podcast. We'll be back next week with another episode of Tax Notes Talk.
Tax Notes Talk is a production of Tax Notes. You can learn more about us by visiting www.taxnotes.com/podcast. When major media wants the straight story, they turn to Tax Notes. Thank you for listening, and join us again for another edition of Tax Notes Talk. Tax Analysts, Inc. does not provide tax advice or tax preparation services. Nothing in the podcast constitutes legal, accounting, or tax advice. A full disclaimer is included in the transcript.
We are excited to announce the expansion of the Tax Analysts Awards of Distinction, recognizing individuals and organizations whose work has had a significant and lasting impact on tax law, policy, administration, or public understanding. The next category, U.S. Federal Taxation, is live. We are currently accepting submissions to honor contributions of measurable impact in the federal tax field. The future of tax policy starts with bold ideas and bold leaders. Nominate now through January 30th. For more information, visit awards.taxanalysts.org. Again, that's awards.taxanalysts.org.